So tell me, please, what leverage does China hold in these negotiations?
Well, if you listen to Donald Trump, none at all, because he's just willing to go to fight it tooth and nail, right?
There is a cultural thing where China will always save face. They will save face despite their economy going down the toilet, though.
Hello and welcome to the Market Edge podcast. This week we're diving headfirst into global market Armageddon that's been created by Donald Trump's tariffs over the last couple of weeks.
But with Armageddon brings opportunity, and as traders, we love opportunities. So this episode is absolutely unmissable.
We're breaking down some of the key trading strategies you can use in times of high volatility and showing you a few amazing charts which are going to help you along the way.
Yeah, so if you're serious about trading, you need to pay it attention.
Do us a favor, like and subscribe. If you're watching on YouTube, hit like on whatever video format you're looking at. But more importantly, David, where the hell are you?
I'm in Portugal, James, because I was meant to be on holiday, but because of this absolute, as you said, Armageddon, we've decided to do this more impromptu episode. I mean, I couldn't have picked a worse time to go away, really.
Yeah, absolutely terrible timing for your holiday there. But let's get straight into the meme of the week. We could have picked from hundreds of memes this week because it's nuts. You've got Donald Trump on assembly lines. AI is working particularly hard this week on a lot of these images that have been made. But the first one we've got here is from Squid Games. Is that red light, green light, and it's got tariff off, tariff on. We've got the Spider-Man meme. Everybody knows the Spider-Man meme. And you've got China, one Spider-Man with the Chinese flag, one Spider-Man with the US flag, more tariffs pointing at each other. And the last one, which is which is the again from Spider-Man. We've got a bit of a Spider-Man theme going on here. But it's the Tobey Maguire taking his glasses off, looking at his ripped state. One side says Liberation Week, the other side says Liquidation Month. Now, this is all because it's been absolutely nuts over the last couple of weeks, and it has literally been tariff on, tariff off. I think my first question to you, not of is this financial Armageddon and things like that, we'll come to that, but is it a backtrack from Trump? Has he just completely and utterly reversed things? Has he lost his balls basically in this one?
Well, no, I think he hasn't lost his sort of mettle. I think what's happened is that he's following through with what he was suggesting. The problem is, in my view, is that he's following through to an extent that doesn't necessarily make US businesses very confident at the same time. And when you're doing that, it really is going to have these volatility effects because what we're seeing at the moment, for instance, and one of my big ideas going forward is that all we've done, or all Trump's done, especially with the last, week of reversals, if you like, on tariffs, is kick the can down the road. The 90-day thing is just creating volatility now, leading into, end of May, June. And so all this is creating is a lot of uncertainty that is going to keep bubbling up under the surface. And if we see what happened on Friday, for instance, the media were reporting that Trump had reversed the iPhone tariffs, reversed all the chip tariffs and stuff like that. And then last night he threw socials out. I don't know what the equivalent of writing a post on True Social is, but effectively tweeted out that it was not being walked back. It was just being bucketed differently. Again, what does that exactly mean? Markets don't like that kind of uncertainty and that geopolitical instability. And this is what they keep pricing in. This is what the markets keep pricing in. Now, interestingly, futures did not, when I saw the open, did not take it too badly. Futures gapped up. So the S&P 500 and NASDAQ actually
Yeah.
gapped up, but it's still creating that bubbling under the surface going forward.
Yeah, and do you know what? If you look at the situation that we've got here, he has kind of backtracked though, because he's got this blanket 10% tariff now across everybody, right? So which is backtracking from what he'd said previously. There was 25%, there was 30%, there was whatever there is, and then there's a blanket 10%. I loved the line that came out on Friday, which was by a Trump advisor. I'm not sure if it's press secretary or whoever it was, but they came out and said, yeah, but This was Trump's plan all along. He planned this all along. It's exactly what he wanted to do anyway, which is like, unbelievable, a proper Trumpism. Yeah. Well, we know everything's, gone all over the place. We know markets are down 400,000%, but this was the plan overall. This was always the plan. The tweet of the week is on Truth Social, of course, is Donald Trump saying, this is a great time to buy DJT. Which is, of course, that definitely just sets everyone feeling so much better. But there's three main questions, right? Is this going to be global recession? Are the markets going to hell in a handcart? And number three, or should I just be buying the dips? That's the problem. But this week, you can't ever think that this week isn't going to be the same as last week, and we're going to get all sorts of volatility all over the place again.
Yeah, I think, the way that I've been looking at this market is looking at when expectations are too stretched. So back on Tuesday, I believe it was, when the market, or no, sorry, started rallying really hard and had the best day ever, basically.
What was it? The biggest recovery or biggest one-day up move since World War II? Just to jump in
Something
there.
like that, yeah. Um, and I'd said the day before to buy American. One of the things that I put in a note that I write every day is think of the most American stock that you can imagine and buy it, basically. I didn't point to any, I gave a couple of examples.
What is the most American stock you could think?
For me, it's Abercrombie. Purely because if you think of Abercrombie, you think of, Californian surfer. That is what I think of when I think of
Yeah,
Abercrombie.
yeah,
And it's a very
fair.
American name, a very like American preppy name. And I went with that, it rallied 16%. Fantastic. I was on holiday. That was my best buy ever. And I'm not even looking at the markets all day, which is a completely different lesson that maybe we can come on to. Um, but the way to think about this market is to what extent is price stretched and to what extent is sentiment very, very stretched as well? Because just because something seems really, really bad doesn't mean then that price should keep reacting in a bad way. We have to remember the market is not reality, and the market is made up of various different mechanisms. In the short term, one of the most important mechanisms being that markets trade against both leverage and stretch positioning. So if you can think of all of those people that started short in equity futures, massive leverage on margin, when that sentiment gets so far stretched, it's got to go somewhere else. And a lot of the time, because of the way hedge fund mandates and the way that risk limits and volatility control funds are set up, they have to rebalance their holdings effectively. And the way they're going to do that is they're going to start entering, firstly, the Mag 7 names, because highest market cap means they can get the most cash in there. And they are about 35 to 40% of the S&P 500. So they're going to be doing that. And then they're going to be following up with the smaller names that are a little bit more tactical. So that's probably how to think of this market is that when everyone is, to put it quite frankly, pissing themselves, you've got to think, is this now logical? Have we seen a really, really bad move? Now, for instance, I think the volatility is now going to be backloaded to 90 days time. I think I put out a note last week saying that we were kicking the can down the road.
Yeah,
And that's exactly what's going to happen. An interesting bit of data to watch is what happens to European automakers now. So Mercedes, Volkswagen, Porsche, they're going to be kind of a barometer for me going forward as to what people are thinking about these tariffs over the next 6 months, in my view. But there are so many opportunities out there, and it's still not a situation for me that is automatically going to lead to global recession. But one thing I have said is that the COVID monetary policy and fiscal policy, that supportive policy that came around, when the world had to shut down, actually clouded over the end of the business cycle in 2019. If you look at data from the second half of 2019, we were pointing to a recession then. March 2020 hits, all of that support came in and covered up the end of the business cycle because basically everything was forced to shut down. I think we're now seeing that end of the business cycle, what, 5, 6 years later, in fact.
yeah.
Um, so we're coming to an interesting period, and maybe Trump's just catalyzed it, but it doesn't necessarily mean we're going to see global recession just yet.
suppose just going back on that COVID point there, obviously we had this similar situation after 2008. Markets kind of started to recover. They were all pumped full of stimulus and everything else. And then we had a European debt crisis and all those points that then tanked markets. Now you've got a situation similar to that where you had COVID, the stimulus that was pumped into it. Things have just about recovered. And now this being so completely and utterly self-inflicted it seems like a bit of the economy shooting itself in the foot. The worrying point here, and this brings us on to the winners and losers actually, because one of our winners and one of our charts from last week was dollar yen. Dollar's been all over the place. We've seen a lot of movement within that, as you would expect. But not a great time for us, and we were a little bit longer away, weren't we? About 3 weeks ago that we picked these, so obviously didn't know this sort of stuff was coming out, but. When you see the situation that we've got here, where do we get to from looking at the likes of the dollar and, more importantly, I think, and where a lot of questions have come in has been on Bitcoin. Where do we look at those potentials? Because it's quite easy to bundle Bitcoin and the S&P together, isn't it? Because they both got slammed. But maybe that's not necessarily the case.
Well, there's probably one overriding question though as to what is a safe haven, right?
Yeah. Actually, there
And
wasn't really any questions there. I just kind of spoke at you for a minute.
that's what I tried.
Yeah.
That's why I tried to turn it into one. So I think the overriding question there is what is a safe haven, and everyone, whenever the dollar gets slapped, they say, "Oh, is it the end of the dollar?" That's all I've been hearing about, and it's just complete nonsense because unless you're going to change the entire way the credit infrastructure of the world is set, the entire way that trade is priced, all of this, the dollar is not going anywhere. The dollar is not going anywhere.
Mm.
And so right now, if you look at the euro, it's at a 15-year trend line. Okay. That trend line runs from about 2009 all the way down, and it's right at it. Whenever it's got to that trend line, the euro has collapsed again. Obviously, we saw euro trade up to like 1.1415. Not sure, been on holiday just to rub it in once again.
Are you on holiday?
But
I haven't
yeah,
mentioned
yeah,
it.
you can see the surfboard there. Uh, but whenever it gets there, you tend to see another flip of sort of regime. We saw the first regime change in Jan the 20th,
Mm.
when Trump came in. And now we're seeing it go the other way. So, in my view, I think the dollar is set to strengthen from here. Lots of, and especially so if we start hearing about loads of news articles coming out, referring to death of the dollar, of zero hedge, start talking about death of the dollar. However, they talk about death of the dollar almost every day.
Yeah.
So I think it's going to be key if we start hearing, some big macro names at banks, because they're always wrong, talk about dollar dying. It can't. It's almost like there's this, to put it bluntly, brain damage-ness over the dollar. And there has to be an understanding of the structure of the world and where the dollar's role remains in that.
Mm.
For instance, if people really want the US consumer to stop buying from them, which would be suicide because their GDP would completely collapse as the US has a $30 trillion economy.
Yeah.
And everyone else is like, I mean, the UK's at what, 3 trillion? A joke. Um, if they want the US consumer to stop buying from them, then that's going to mean that treasuries collapse because what they do is hold dollars as a part of trade in US treasuries. And then perhaps we'll see, the US completely collapse, but no one is going to do that. No one is going to stop buying from the US
Yeah.
and vice versa. It just will not happen. And so this reciprocal tariff talk, it's all going to get walked back eventually.
What
I
about
think they'll
China, though?
set,
Because that's all well and good saying that for everything else, but what do you do when we get to China, the China situation? Because that looks like it will be two nations that just are not going to back down.
they're relatively ideologically the same. It's quite funny. Now, the other thing that's interesting is when you look at Chinese GDP per capita versus
Which is
US
coming out
GDP
this
per
week, by the
capita.
way. Actually, there's the week of recording. We've got quite a few bits. We've got Chinese GDP being released today, I think this week at some point, and the ECB rate decision. So there's a lot that's going to give us an idea of
Yeah.
how countries are reacting to this.
But if we focus purely on Chinese GDP per capita versus US GDP per capita, Chinese GDP per capita is $12,500. US GDP per capita is about $60,000. So what, someone please tell me what leverage China holds outside of Beijing, Shanghai, and a couple of other cities. It is a third world nation, okay, if you exclude these cities. So tell me, please, what leverage does China hold in these negotiations?
Well, if
They
you listen
hold
to Donald Trump,
nothing.
none at all, because he's just willing to
They
go to fight it tooth and nail, right?
listen. There is a cultural thing where China will always save face. They will save face despite their economy going down the toilet, though. All of China's demographics are absolutely shot to bits. Their private debt to GDP is shot to bits. They look like Japan in 1989 when Japan had the lost decade.
Mm.
Don't let anyone fool you over China. I have a rule in the group that I run, and with the research, and it is always never ever get enticed into buying a Chinese stock, the Hang Seng, or a Chinese ADR listed on NYSE. Never, because it doesn't have the right fundamentals for it to go up and actually make money from.
The chart of the week, there's two of them. There's the S&P, which of course we've spoken about, and the movement that we've got in that. Now we've kind of touched on the fact, and these two both come in because one is the S&P and the other is the VIX, right? So we've got both, and they kind of merge into the pick of the week as well. But the S&P, I suppose it's an outlook as to what do we think from a volatility perspective, and what do we think from a S&P perspective as to where these go. Now, of course, you've got the short term here and you've got the long term. So from an S&P perspective, now running into this week, maybe the next couple of weeks, we're going to see probably quite a lot of volatility. We're going to see these markets do similar things to this. Now, of course, they're going to calm down. You know, we're not going to get 1,000 points here and there continuously for the next 2 weeks. But the likelihood is we do get quite a lot of range-bound markets, but quite a hefty range, right? Because no one's going to nail any colours to the mast, because we don't know until we get to the 90 days time what the market's then going to do again. So from that perspective, the S&P is kind of range-bound. It's kind of set its nice range areas, hasn't it? From the highs that we were previously to the lows that we hit. You know, even though that's an absolutely huge range, it's within there. The other side is then the VIX. So does the volatility in the VIX continue? Is the VIX quite a nice trade on its own?
So the VIX is obviously it's a 30-day variance swap on S&P 500 strikes.
Yeah.
So what we're looking at with the VIX is basically a derivative of S&P 500 derivatives. And so the way to understand volatility in the context, in a very, very simple way of the context of the VIX, is imagine you've had loads of these big falls over the last couple of weeks. Just because the VIX is coming down doesn't mean the S&P 500 is not going to come down as well.
Yeah.
What it means is that those ranges are just going to be a little bit smaller each time. But because we've had such massive ranges, even a small reduction in the VIX can still be relatively big point sizes, if that makes sense. So look, the VIX is a very, very hard thing to trade. And I would never trade it, to be quite frank, as a CFD. I would never trade it as a spread bet or anything like that. I think it's one of those things where you have to understand what you're doing, and you have to understand the underlying Greeks and volatility dynamics, basically. Most people who trade the VIX would trade it as a spread. So you trade it as maybe a calendar, you trade it as a certain option structure. But I wouldn't trade it outright necessarily unless you're a good punter.
To kind of wrap ourselves up here, we've seen all sorts of nutcase moves over this last couple of weeks. Likelihood is that's, even though it may slow down a bit, it's not going anywhere. What's the advice for a general trader, and what are you doing?
In my SIP, for instance, I've been buying US single stocks, but in my active account, I've been just really playing in FX, where FX for a long time now hasn't been something that I really look at.
Because there is a
During
point here that
periods,
volatility does breed trading opportunities, right?
well, exactly. But because FX has had such low volatility, I tend to find that the capital efficiency of using FX during times like this outweighs other
Yeah.
products. And what I mean by that is, I can get 100 to 1 leverage. So relative to me, perhaps tucking down, 25 grand in a single stock to try and play some volatility, I can chuck down 2.5 grand and use that leverage
Yeah.
instead. Um, and it's also very, very liquid and also 24/5, which is something massive in these markets. You really do want to be able to get in and out during the entire weekday. So it's a good idea to look at the products that you're trading with. And just to add on to that point, actually, it can be why crypto, especially Bitcoin, is a good product for very, very volatile markets like this,
Mm.
especially when news is coming out overnight, because it will react. And either you can hedge or you can actually take a speculative position if you're going to be, really on it all day. Now, that's really for traders, but for investors, I would say focus on the 200 weekly moving average. Any large US stocks that you think aren't going to go away in the next 3 years because they've got, a massive client base, they do so much revenue, I would suggest to maybe look at getting long them, purely because the 200 weekly moving average is pretty much, if a company goes below that, it's kaput.
Yeah, look, and I
Like,
think
there's
this,
no point really looking at
that's
it.
quite a nice area to look at, because we always talk about this, you know, if it's going up and to the right, right, and these new 52-week high areas, you can still look at those charts that were going up and to the right. Look at the correction that they've had. If they've gone below that 52-week moving average, 200-week moving average that you were talking about in their correction, then okay, maybe you're looking at something that's not necessarily there. But if it's held up around that area, if it's still above that, if the chart still looks like it's up and to the right, then there are buy the small dip situations out there, right?
Yeah, I'd say basically there's something to look at here where um, you can, when we have broader corrections like this, look at value leading to momentum.
Mm.
That's probably the way that I would think of things. So, value in terms of, okay, we're going to look at these fantastic US companies that have fallen and are trading at a discount. People don't want to get involved in them, which provides risk premium. That's how you basically make money in markets. You're doing things that other people don't want to do. And then when they start trending back up to normal levels again, you can then perhaps consider it as, okay, well, now this is where we add because they've regained their fair
Yeah.
value. Something in the economy has changed, which now means that their price to earnings, for instance, should reflect a much higher value in the future. Then you change it to a momentum perspective. But right now, it's a focus on discounted value, in my view.
Yeah, no, absolutely. And look, where do you see these markets going? Are there buying opportunities? Look, just as us, your traders the same as us. So let us know what you think. But like and subscribe, comment if you have any comments. But be safe with your trading out there. There's going to be much more volatility to come, and we'll catch you next time.